Hey, greetings from Portugal, and we are wrapping up our trip here. And I'm going to throw up a couple pictures. Not that that's why you came here. And I'm going to talk about some stocks that are timely right now. So you want to maybe grab a pencil and piece of paper and look at the stocks that I'm going to do in a second. But right now, I'm just going to scroll through a couple beautiful pictures from Portugal. Place is really cool. I never knew it was this awesome, but I love it. Anyway, just a few pictures for you to see how cool it is in Portugal. If you like to travel, you should come to Portugal. Anyway, it's beautiful, and we've been in a bunch of different cities, and now we're wrapping up and probably going to head to Greece for a little while. Anyway, been a lot of fun. But let's get to the meat of the matter. The meat of the matter is, while you're sleeping, I'm in Portugal 5 hours ahead of you, most of you anyway. I have a screen that I call the cash flow machine screen. It's for my mastermind people that are in this group. And about every week or two, I give them the results of my screen and show them what I think are the stocks that are likely to be good cash flow machine stocks. In other words, good income stocks. And so they're getting all this timely information when the market turns green, and the market just turned green a few days ago. So we are ready to go here. And these are the stocks that are really likely to break out. You can look at this and you'll see a lot of names are breaking out. And I'm going to go over a few of these names for you. But these are names over the last couple of weeks that I've told my members about. And I want to give you a kind of an inside peek on what we're doing here. So you can see it's Broadcom is one of the big ones. We also have Cloudflare, which has been on the list for quite some time. We've got NVIDIA. NVIDIA obviously is like one of the best performing stocks out there. Palantir also in a breakout, exciting stock. And I want to point you to something right now, and that is that the price percentage change, and this is as of yesterday. I took a little screenshot as of yesterday before the market closed. You could see most of these stocks were up a lot, and the market wasn't even up that much. So Broadcom was up 2.5%. NVIDIA was down, but then Palantir was up 2.4%. Celestica, 4.3%. Futu up 6.4% and about to break out. KLA is about to break out. I'm going to show you these in just a second. And Taiwan Semiconductor. So the stocks that are kind of bubbling up when the markets are going up are these stocks. And these also fit my criteria for cash flow machine, for income production in your stock investing. So if you're not investing for income, you're probably investing for the other thing, which is capital gains. You buy and hold, or you buy and flip. You hope it goes up. You're day trading, whatever. We do income investing. And when we do income investing, we almost don't care if the stock goes up or down. A lot of people that are not experienced in covered calls are saying, well, you don't want it to go up, then your stock gets taken away from you. Yeah, okay. First of all, so what? That's great. And then second of all, that's the most amount of profit you can make is when your stock gets taken away from you. But really, our stock doesn't get taken away from us because we're rolling. We're using the stock as an asset to sell against and create income. And I'll show you how I'm going to do that on one stock in a minute. And so that's really all we want. We don't want the stock to drop. The big risk is if the stock drops a lot. Like, we don't have any downside protection on covered calls other than selling in the money, which I do most of the time, and collecting the juice, which is the income, the extrinsic value, which I do all of the time. And so that income allows me to create $5, $10, $15, $20,000 a week in income just from owning these stocks. So I'll give you an example. I had a person that took one of my courses, and we were on the phone this week, and he said, hey, listen, I've got 5,000 shares of NVIDIA. And I went, 5,000 shares of NVIDIA? What are you doing with it? And he goes, well, I don't know. I don't want to lose it. I really like it. I'm like, okay, but if it doesn't do anything, like, you're just letting it sit there. Why don't you make some income from it? So we figured out a spot on the chart, and we figured out a spot where he could sell options and make $2 in juice. And $2 a juice on 5,000 shares of NVIDIA for just over a week is $10,000. I'm like, dude, you're leaving 10 grand on the table if you're not selling calls. Like, 10 grand a week it's a little over a week, but 10 grand a week is pretty darn good. In 50 weeks, what is that, 500,000? I mean, that's really good money. So he's like, wow, that is, let's do that. And so he's thrilled. He sold, look at it, NVIDIA even went down yesterday. And, when it goes down, you still make the juice. Now, the stock is going to go up and down anyway. He was going to own it anyway. So why not collect the juice on it? $2 a week on 5,000 shares. It's 10 grand. Now, you need $500,000 to do that, but that's just one guy. Like, what if you only have 50,000? Okay, so instead of having 5,000 shares of NVIDIA, you got, 500 shares of NVIDIA, whatever. It's all scalable, and it's all up to you. So That's what we do, is we just kind of tweak things from an income perspective. All right, so let's look at some charts. I use a company called investors.com, and they have a program called Market Surge, and that's what you're looking at right now. That has beautiful fundamental area over here on the left, and then over on the right, it's got the technicals, basically the chart. And so I'm just going to kind of read the tea leaves for you from some of these stocks that we're talking about. But if you look at Broadcom here, Broadcom is basically in a breakout right there. You can see it. And so it came up the other side of this cup formation here, and now it's got, look at how many weeks in a row, it's like 8 or 9 weeks in a row of up volume from this big, beautiful, and if you watch me, you know I love hammer candles. This is a beautiful weekly hammer candle off the bottom. So this was like your cue to buy if you wanted to take a chance and be early on this, and if you'd have done that, you'd have bought it at, say, 180, and now the stock is at 252. But right now, it's kind of at that inflection point. It's at that pivot point, that breakout spot. And so I like Broadcom for the long term. Plus, look at these beautiful numbers, from $4 in earnings to $4.87 to $6.59 to $8. I mean, this company is doing a great job of growing its earnings. Its sales are growing as well. Look at these double-digit sales growth quarter over quarter, double-digit earnings growth quarter over quarter. Like, there's nothing wrong with this company when it comes to fundamentals. And so the idea is to try to pick the spot on the chart where you think you've got the best chance of making money, whether you're investing for income or not. I like to buy things that are going higher because covered calls are a bullish strategy. You want your stock to be going up. That's where you maximize your profit, whether you're in the money, at the money, or out of the money. I'm mostly an in the money guy, but let's say for these, I'm going to talk about being out of the money on a couple of these. You know, out of the money, if a stock is breaking out, you get a little bit of that upside, plus you get a little bit of that juice. We want both in this case. The next one on the list is Net, which is Cloudflare. Look at this thing. It made a beautiful, well, I'm not sure it's beautiful. It's kind of a V formation, but let's call it a nice cup formation. And there it is with the breakout right at this spot. It's right there, guys. This is the spot where stocks break out. Now, 40% of the time breakouts fail, which means 60% of the time, if they're profit breakouts, they will succeed. This is a low volume breakout. It's got less chance of succeeding, but it's right at that spot on the chart. And, you know, again, good earnings growth, so from 49 cents 2023 to 75 cents to 80 cents to $1.02. You see the trends are up, right? We like these blue numbers here. We like these trends to be going up, and the stock reflects that. We are right at an inflection point, right at the pivot point on Cloudflare. So if I were looking at this and advising you to get into it, if you weren't brand new in covered calls. So if you're brand new in covered calls, I'm going to say, look, the safest way to do covered calls is to be in the money. But there's a time, like when a stock is breaking out, to be at the money or maybe even a little out of the money. It's riskier. You don't get much downside protection. But if you want to take a little more risk and be out of the money, then you can go ahead and do that as well. I just like to be in the money most of the time. Okay, our next stock is NVIDIA, and you can see NVIDIA, it came off the bottom right here around that price, which was what? Let's look at it here. It was 86.62, and now it's 656 points higher, it actually is. It's right around the 143 level, and you can see the all-time high is right in here at about 152. So it's getting ready to come up to this 152 level. Now, it isn't at a breakout specifically yet. But if you'd have gotten into this when we started talking about it a few weeks ago, there was a gap here, right? There was a gap. And I told people, look, there's a gap right there. Now, eventually that gap is going to fill, but it gapped up. And it gapped up on not great volume, but volume that said, hey, listen, we're serious now. And it gapped up over the 200-day moving average or the 40-week moving average. That's that black line. So it started to paint a picture that things were looking good for NVIDIA. And I don't know if you were watching me, 6-8 months ago, I said, hey, listen, NVIDIA looks like to me it's in trouble. So I wouldn't be buying NVIDIA because it had done this big run up and it was in a late stage base, and late stage bases are prone to failure. And so it made its bottom, and then it created a whole new time to enter, and that time is now. And so right now it's an early entry. You kind of want to see it breaking out at that 152 level. It's not there yet, but there's a spot here for early entry if you like NVIDIA, and if you want to kind of buy it and wait, you can collect the juice and do covered calls while you wait. So NVIDIA is on most of my students' radar right now. I'll tell you what, the next stock we have here is Palantir, and you can see Palantir is in an official breakout. So it's almost a little too late to be chasing this one because our best time was buying it a little while ago, a few weeks ago when we were talking about it in the group. And there's a lot of weeks in a row that it's now up. And this stock has a lot of upside potential. It's just you want to buy these at the right spot on the chart. After the right spot on the chart, you have to battle a lot of sellers. It's like you're sword fighting out there. And so things are still going up, but it's just a little bit harder. And we want to see some more volume on this breakout also. But I think right now Palantir is constructively going higher, and it pays a ton of juice. It pays like 3% a week or 2.5% a week, depending on where you sell. It's a really dynamic and dynamite stock for covered calls. And if you just want to buy it as an investment, it is actually in a breakout right now. Vertiv Holdings is a little early for a breakout on this one. It's kind of making a little consolidation here or a handle on this cup formation. You could see kind of a little cup formation here, and it's kind of going sideways, making maybe a handle, maybe not, but it's not ready yet. It's in a kind of a death cross here. You want to see this going up above it. But nonetheless, this fits all the criteria of earnings and growth and sales and all that kind of stuff. And we are in a green market. So if you want to get an early entry, just above the 200-day moving average is not a bad early entry. But don't go crazy here. It's not really breaking out yet. Enough analysis of the stocks. Let's just take a quick look at what you could do if you own NVIDIA or if you want to get into NVIDIA, for example. And so what I would do is in NVIDIA, anticipating we got a green market, which means short term, we've got a little bit of a spurt going on here and some buying support. And second of all, we got a green stock. Like things are go for a lot of situations. That means we got a tailwind behind us. The market is a big tailwind. And when the stock is green and moving up and there's more resistance to the downside than there is to the upside, that's when you want to be in a stock. So let's say we get into an NVIDIA and we want to be out of the money sellers of options, okay? So that way what we're doing is we're not getting any real downside protection except for the juice, but we are giving ourselves a chance to make money if the stock goes up. Now, I don't always recommend that because there are times when the stock is not moving higher. And if it doesn't move higher, you want to be in the money so that if the stock goes lower, you've got protection. And if you know what I mean by protection, the in the money amount protects you because while it goes down when you're short on the short option, you lose money on the long option. So those two offset. When you go down on something short, you're making money. So those two in the money amounts eventually offset, and then you're left with the juice, the income. So if a stock isn't moving higher, why be out of the money, right? So we try to not predict the stocks, but use probabilities to kind of say, we think the direction of the stock is skewed a little to the upside, so we're going to sell out of the money possibly, okay? So in this case, let's take a look at it. We've got the stock trading at about 143, okay? And if you look at 143, if you go out of the money to about a 30 delta, which is a plan, let's say that you want a trading plan that says, I want to have that upside potential when the stock is moving up, so I want to be out of the money. Well, using a 30 delta is not a bad plan when the stock is going up. All the other times you want to be at the money or in the money, in my opinion. And so you should try to create a trading plan accordingly. But let's look at these 146s, and you can see they've got $1.59 worth of juice, okay? The juice is the extrinsic value, and that's our income. So if you want to make in the next 8 days, these are 8-day calls. You can see that 8 right there. If you want to make in the next 8 days $1.59 or $159 per contract, you can see that if you can do that, if the stock goes up to 146 or more, you're going to only make 196% a year. Okay? Doesn't matter if it goes higher. You're only getting 196%. But if it doesn't go up, you still get this $159. So let's say you have 10 contracts. That's $1,500 for 10 contracts, which is 1,000 shares. Okay? So $1,500 if the stock doesn't go up is still pretty good. And if it does go up, you get this extra $5 of increase. Okay? Does that make sense? So that's what I would do is if I were a little bit aggressive and I really believe the stock was breaking out and we got a green market, all those things are true, and you can handle if the stock doesn't go up because we don't know if it is going to go up or not. If you can handle all that, then maybe selling out of the market at a 30 delta is about the right thing to do. Create reliable income in your portfolio. I did a study a couple of weeks ago about Apple, and I love studying Apple because everybody thinks, Apple is a great stock. Apple's been kind of going down for 6 months, right? But it's still a great stock, great company, right? The stock particularly is not that great right now, but I think it's actually turning around. Doesn't matter what I think. The stock 2 years ago or 2.5 years ago was at the same exact price it is today, right? About $200. And so if you go back on your chart, in fact, if you go back on your chart and look 2.5 years ago, you see Apple about 195, 200, 205. It isn't that much different. So if you'd been waiting, you'd have sat there like a dope going, wonder when Apple's going to go up. But if you sell calls against it, if you could just get 1% a week of juice, right, while protecting yourself, especially by being in the money, you would have done really, really well. I mean, a 1% a week, think about it, is 50% a year. And that's whether the stock goes up, down, or sideways, because that's the income that comes in from the external source. The gambler, the person that you sold that option to, right? The person that wants to make a killing. And so you're sitting there collecting that income, 1% a week, let's call it, and 50% a year. And over 2 years, that's 100%. So you'd have doubled your money on a stock that didn't do anything. If you think about it like that, if you can keep a long-term focus rather than, oh, Mark, the stock went down and I'm losing money, or the stock went up and I would have made more money, or whatever. If you just keep your focus and, hey, we're making 1% a week, that's 50% a year, then that will set you free. I would say that. The juice will set you free, because the juice is that income that comes in from the outside that you don't have to go out and generate the income, right? When you go to work, you've got to go generate the income. Your work generates the income. But by owning a stock and selling calls against it, that outside person is working for you, generating the income. I hope that makes sense, and I'll see you on the next video. Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below, and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.